Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Friday, August the 6th, 2010. Well, the change of trend to the downside today, we have a candle with a lower high and a lower low. Previously we had two candles that made consecutive higher highs and higher lows, and so we had a change of trend to the upside previously for 2 days. That's the extent of the bullishness that was in this market for that 2-day period, which means that we have a very, very strong trend in the higher time frame. As we can see today, we have a fairly large red-bodied candle, and the size of that body is large relative to those around it, and certainly larger than the bodies on the previous 3 days. And the candle has made a lower high and a lower low, thus the change of trend to the downside. With the red body, that tells us that the sellers have made some fairly decent net bearish progress on the day between the open and the close, and the close is a fair way away from the previous close, suggesting that the sellers are keen. The market has tested the support down around the 80.4 region and closed just down below there, and the market is actually testing the whole number at 80, and there was some buying coming in as the market traded down around that area. So there is strong potential for the market to find support down around 80. Below that 80 region, we do have a strong level of support at 79.5 as well, so we do need to watch that if the trend does continue to the downside. Now, in Ichimoku chart terms, we are trading down below the cloud, so we do have a market with quite a strong negative bias in the big picture terms, and the market is trading down a long way below the cloud. The market is also trading below the Kijun-sen and the Tenkan-sen, which means that it's bearish in the medium-term and fast-term time frames as well. Now, the market is trading a long way down below the Kijun-sen as well, and when markets trade a long way down below the cloud and or the Kijun-sen, they tend to look a little bit overextended, and that's what's starting to this market is starting to look a little bit like that. Having said that, though, that doesn't mean that the market will change trend. It's just looking it's looking a little bit overextended, and we've got a lot of downside momentum, but quite often the market can bounce back towards the Kijun-sen and the cloud, which represent equilibrium in a medium term and a longer term time frame. So we do need to be aware that the market may eventually be attracted back towards there. But having said that, there isn't any indication that that will happen. We do have quite a bearish candle today. If the market does, however, trade to the upside, there is very strong resistance overhead, and certainly the Tenkan-sen at 81.23 offers very strong resistance for this market. And when we have a very strong trending market to the downside, as here, the Tenkan-sen tends to point down with a fairly steep angle, and any bounce back towards there will find significant resistance around that level. Certainly the 81.4 region, which was a previous target from a head and shoulders pattern, will offer potential resistance, and then above that 82. But the market's looking fairly weak. The 80 level is very, very significant for this market in the coming week, as is the 79.5 region.